Welcome, everybody, to another Pepperstone live event here, talking about everything to do with the FOMC. Of course, this week it's basically marked to potentially get a rate cut, whether it's 25 basis points, 50, or even possibly no rate cut. The market's sure to be very volatile. On top of that, we've also got OPEX, which is the biggest options expiration of the month, and we begin the second half of course, September, which is well known to be one of the most volatile periods of the year. My name is Thomas Atkinson, and today we'll be talking about the SP500, Nasdaq, currencies, gold, silver, Bitcoin, and everything else. Tyrone's joining us as well. Tyrone, how are you going this week? It's going to be a volatile one, isn't it?
It is, yeah, no, good, thank you. Yeah, look, it's like the calm before the storm at the moment. The markets are kind of waiting in anticipation for what is sure to be a wild ride. Yeah, we were just talking off air as to whether we think there's going to be a cut. Yeah, Tom says it's 100% certainty, apparently, according to the media.
99.
And yeah,
that's economist, not me.
Oh yeah, no, that's going to be very interesting. Well, look out at the market, look out for the market if they don't cut anything. But look, yeah, it's one of those things. The market's clearly waiting for it, and a lot of the key things that we look at each and every day are positioning themselves at very key levels. So we'll jump straight in and see if we can identify some of these levels.
Yeah. All right. Well, let's start with Bitcoin, because I think a lot of interest in the crypto markets as of the last kind of month and so. And then, of course, we'll go through some other pairs, and we'll just quickly talk about a bit of Bitcoin here. So the thing about Bitcoin is, if you're looking at it from a technical basis, you're kind of looking at it from this perspective of the inverse head and shoulders, aren't you, Tyrone? So that's a left shoulder, head, right shoulder, bit of a break to the upside, nice break past these wicks as well, and then a continuation into this level over to the left-hand side. And this is what we call a supply or a resistance level. And basically, it's found a little bit of, caution there. And I think this opens up two really interesting levels. Obviously, break high coming off an FOMC event. Let's say, I don't know, generally Bitcoin, the theory is anyway, Ty, that if you get lots of cuts, then it's kind of good for Bitcoin. So I guess that may make the market go up, but we often say don't predict that, look at the flows. But I think one case is, of course, the break above 117.5, which could really open up all-time highs. And then the other one is actually a pullback back to a very important level here around the 110K to about 111K. Now, we don't know which one's going to happen, do we, Tyrone? But what we do know is that these two levels seem to be probably the most active with the largest traders in the world.
Yeah, and I think both of them are very, very viable trades, actually. The way the market's playing the game at the moment, that inverse head and shoulders, I think we highlighted that a couple of weeks ago, that it looks like it was setting itself up. That's really its profit's already been hit, really, for the margin. And when the take profit for inverse head and shoulders is right at that resistance zone, which we can see there at 17,500, it makes it a very, very easy trade. That one's done now. So, yeah, realistically, we also find ourselves in that mini channel that Tom's talking about, at sort of the one between the 123 and the 111. You can see that it's kind of right in that mid zone, and you could make a case for both directions, really. I'm not even sure I've got a bias. I mean, I would probably prefer, when saying that, I probably would prefer if it pulls back to the 111, because I think that actually makes a lot of sense for another good push long. But if it did take off from here and it started pushing up to around that 123, I think this time I reckon we might get an all-time high, and it might just keep going.
Yeah, I think that's what a lot of people are looking at. You've got to remember as well, if we are following similar Bitcoin cycles, that could also point towards, if you've looked at other cycles anyway, December being really more of a peak traditionally for Bitcoin. So at least some people are thinking that way. I'm just going to load up Solana here for a second, just so we can see that one, as that had a really good technical on it, which we've been talking about here on the show, and we've discussed in general through the technicals the last couple of weeks. And we had a series of just higher highs and higher lows coming in, with it touching one of our favorite indicators. And if you're not familiar, we do like the 20 daily, the 50, and of course, so 20, 50, and 200 moving averages. And you'll often notice that the markets may pinpoint an area and find that as a bounce. And in this case, of course, we did see a breakout up, and it went straight to the first target, which is 250. Now, this is not a bad sign for the crypto markets, because what it suggests is that the larger altcoins, that is the Ethereums, which already have moved, the XRPs, the Solanas, those types of things, are holding very well versus Bitcoin. So that's a really good ratio style thing to be seeing. It's something that's happened in previous cycles, and it could suggest again that maybe markets are thinking in this area. Now, Ty, from kind of the crypto world, we've got the markets, which of course is the US 500, Nasdaq, and all of these good things. So if we have a look here, that is hard to be pressed to be bearish on this chart, isn't it? It's going to need to give us something, isn't it?
It is. Look, it's one of those ones. Look, it's gone up in a very orderly fashion. There's no question about that. Does it deserve to be here is the $1 million question, Tom, I think, and that's the question on everybody's lips, regardless of what the earnings season has given us, regardless of what interest rate cuts are going to give us on or later in this week. Should it be at these all-time highs with so much fear in terms of what is going to happen when the tariffs really start to play on the economy, which we still don't know. And people are probably sick of us saying that because no one actually knows what the effects of the tariffs are just yet. They just know that companies are holding. They're not really passing it on as much as they possibly can at this stage. Inventories are still running on the old inventory before they actually start to implement new ones. There's a lot of negative connotations for what could potentially happen. And if it does, and all that did play out, then the market is extraordinarily overvalued. And I think that's probably the thing to keep in mind. It doesn't mean it's not going to go longer, but it does mean that any shake of confidence in the market, and that shake could come in terms of an interest rate passing or not being passed on like people expect, maybe a lesser amount. I think even you were saying earlier that even 0.5% is potentially on the cards. If it's not 0.5%, it's only a quarter. The market's not going to like that. And if it's nothing, the market's going to hate that. And we know, like you said, volatility is ripe in September. We know that as well. So I think the only thing that we can say is really trade with caution. We're at an all-time high when we're probably at an I'm going to call it an uncertainty high. You heard that first here on the webinar. I think uncertainty is probably at its highest right now, and you wouldn't want to be undefended in a position like that. So if you are long on the indices, just be sure that you've got smart take profits and smart stop losses in place to make sure that you are covered if that volatility does start to kick into the market, because it's on the cards. You can't say that you wouldn't be expecting it if it happens now.
So I've highlighted a couple of key levels. What I did was I just kind of did a quick anchored VWAP. You'll notice again the 20 here has held pretty well. Obviously bounced through here, but it's held pretty well the last two times. That suggests that if the markets do sell, levels like 6,500, 6,450, these could be very interesting levels from the technical basis and have some potential. And then of course 6,350 is pretty interesting, and then 6,200 kind of zone. So they're the three mains that we're looking at this week. Very difficult to buy it at this level. If you are buying it above 6,600, you're mostly doing it based on what we call gamma, which is that the options markets have got lots of calls in them. And at 6,600 in particular, which is what happened last week when it went through 65, that actually pushed a positive gamma, then there's a lot of hedging that may have to happen into this week's OPEX. So that's kind of the rundown there on the US 500. The three key levels we're looking at, in particular, those zones, we're looking for reaction post FOMC in this case. And a lot of this is post FOMC because we often think of a news event as an opportunity. If you think, like, wow, could we have a cool opportunity coming? Yes. What is an opportunity? It's a chance to buy at a more strategic level or sell at a more strategic level with replication. So I always like to do that. Nasdaq is pretty similar, Ty. We are getting some overbought signals, things like the RSI, things like stochastic, all of that stuff that's always going to be showing. Again, as you say, maybe having some kind of safety net could be worthwhile. Maybe it doesn't really matter. The trend is still quite bullish. Who knows? Each person's got their own specific needs, and obviously it's general concepts here and educational concepts. But you can see here that the key level is going to be somewhere around this 23.6 for the Nasdaq, which is going to have a lot of trade in it. 23.6 has got a lot of trade. And then, of course, you've got the classic support demand zone, which is around 23K. So I think that's probably the two main ones for the Nasdaq. Would you tend to agree, Ty, if it pulled back that way?
Yeah. Yeah, absolutely. I think that the market is very similar to the SP500, of course. It's breaking to new highs, and yeah, they are key levels. There's no question about that. And realistically, if you did trade to those levels, I think they're a solid technical standing as well. I think the that 23,400 in particular, so it's actually one of my favorite levels. I think it's actually a really, really good potential support base for it. So I think it's a trade with caution, but it doesn't mean to sit on the sidelines. I think you can definitely trade it. It's just a case of understanding, what the expectations are of the market right now and trading within those boundaries. So by that we mean, no one's sitting here saying the Nasdaq's going to 27,000 in the next 3 months. Okay, so it doesn't mean that it won't, but that's not the expectation. So if you are trading long, have very have very strong expectations that the market's going to do smaller moves and maybe with enough momentum to get you to where you need to be. So be realistic and you take profits, I think, is the best way to say it, isn't it? Because if you do that, you're going to get in and out in an orderly fashion. And this is not the time to be going in for a long-term position and saying, okay, I'm going long. Okay, anyone who does technical analysis would know that. Anyone who's been following us for the 15 odd years that we've been doing this would know that. So right now we're in trading mode. We're not in investment mode. And I think there's a very, very important difference in that time. So just as long as you understand that, you're always going to set yourself up to do the right thing. So when you are trading, even if you are trading short, it doesn't mean that we're going to be Armageddon and we're going to be seeing it back at 22,000. It just means that those key levels that we talked about, 23,400, 23,800, they're all levels that you could aim for on a potential short. And scalping is the way to play the game right now.
Yeah, and I think also a few things are getting close. So I thought we'd just go from S&P, Nasdaq to the Russell, which we've been talking bullish on for weeks now. And the reason was because, of course, we broke a key technical. And what does that mean? It means that from a key technical, you generally expect markets to move towards the next key technical, which we're getting closer to. It kind of suggests that maybe we'll see a bit more of the buy. Maybe it's the rumor, like you said before, Ty. Maybe it's a buy the rumor, sell the fact. I actually pulled some data. I thought maybe, hello, Craig, by the way. There's put in the chat. Hello, everyone. I actually saw some crazy stat from 2002, 2003. So this is where the Fed actually paused for 6 months and then started to cut again. And one of them, the market came in bullish and then it actually sold after. Now, the problem is there's only two stats, guys. The other one came in bearish and then actually bought after. So it was a true either sell the rumor, buy the fact, or buy the rumor, sell the fact. So it was the alternate. So that I wish it was like 10 data points so we could actually say, okay, that looks better. But either way, for the Russell, Ty, I still think it's kind of bullish on these charts until proven otherwise as well. And I think this one is, targeting in that target we've had for a while.
Absolutely, and I hope people were paying attention a fortnight ago when we last did this, because we did isolate the Russell as the one that's going to be the best vehicle if we saw continued strength in the indices from the US, and this certainly has outperformed the other two. And that really comes down to logic in terms of it broke a key zone, but just as importantly, it wasn't at an all-time high, and it had an all-time high in front of it to aim for. And those trades are always easier to get into because you're not trading into uncharted territory. The market's been there before, and it's playing a little bit of catch up with the other two major indices as well. So hopefully you were able to take advantage of some of that, because I think there were some really good moves there in order for you to get in and out. But again, I don't know if it's done, and more than likely we're probably going to see it creep up a little bit closer to those all-time highs over the next couple of days while we wait with bated breath.
For the result, exactly. And then also remember, Thursday is also the day before OPEX, which tends to be the more volatile day. So some interesting stuff. All right, let's move from the kind of bullishness of the indices to what is going on with the dollar, which is obviously quite different. And I like the weekly here when you start looking at it. And this kind of suggested, I think, last week that it was going to start shorting. Now, there are two ways to play everything, so we'll talk about both options. But the first one is that the US dollar is very bad looking when you look at the weekly. It's got rejection, 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 and then it finally closed below this 97.50. Now, when that happens, we're obviously pushing down, and if we close below 96.50, Ty, then it's likely going to really press, I think, down to the 95s. But at this point, the trend.
Yeah, if it closes below 96.50, and this support base gets broken, I think we're in awful trouble for the dollar index.
Yeah, exactly. And if we go over here to the daily, you can see that big daily rejection that happened last Thursday, which suggested that there was a kind of short on the dollar. Now, it has come to a temporary support. The problem is that it's before the FOMC. This is going to be currency is going to be very sensitive. So I thought what I'd do is I'd show you two currencies that I'm looking at. One of them here is the odd US dollar, which we can see here broke to the upside just a few days ago. So that actually is broken to the upside. I think that looks quite strong, coming off a coil too. So that suggests that this kind of rainbow colors we've got up here, which are previous resistances, could be starting to get targeted. So that's one thing. It's kind of the odds broken up and out before. Okay, sure, yes, it's hit some form of resistance, but again, even pullbacks, you'd have to think right now being bought up. What do you think, Ty, about the Aussie break? It's been a while.
It has been a while, and I think it was well anticipated. Double bottom there off. I just really like this trade, and it played out beautifully from a technical standpoint as well. I do look. There is a bit of resistance here, sure, but I think it's got a ways to go. And if that dollar index does break that support that we're talking about, that key level of support at 96.50. I don't think there's a lot stopping this getting up to that sort of 68.20 to 68.80 level. Actually, I think that whole zone is a buy-up zone.
So this could be a bit of a flow, thing this week if we do see it. Now, the reason I say you can play it both sides is because imagine with a chart that looks like the dollar index, which looks clearly quite short. In the technical aspect, you've got shorting wicks, you've got lots of pressure going on the downside. If it reverses that, can you imagine how many people are going to be offside? So sometimes that's why we say patience, react, don't predict, because then you get that offside move, and then all of a sudden things can get pretty wild. So sometimes it's better to wait to see if there's an opportunity, come from the abundance mindset and see other things. It's kind of similar here with the euro. The euro is dialing in on this high, which I'll show you guys is 117 kind of level, so 1.17. And that's a really important high, I think, for this particular currency. Of course, it hasn't broken out. Like the dollar's kind of breaking a little bit to the downside. This one hasn't broken to the upside. But if you check the weekly, you check the monthly, and you check the daily, they are all bullish still, aren't they, Ty? So you have to think the trend is currently bull.
They are, and it is grinding its way up there. Like I say, I mean, whether we do get that big shock to the market, and all of a sudden the dollar index is back up at 98.80, and then the euro is going to feel some pain, obviously. But right now it looks like it's grinding its way up, and probably lagging the dollar index, to be truthful. I mean, I agree with you. I think it is lagging it a little bit. And for something that's completely correlated, I mean, we know how much of the dollar index is made up by the euro. Maybe it is a little bit of a sign that the euro's got a bit of catching up to do, and there might be an opportunity. But I am very, very wary of opportunities that look like they're presenting themselves 2 days before one of the most important announcements of probably the last 3 months that have just gone.
Yeah.
Be careful of the trap. Beware the trap.
It could be, and if it is a trap and you're not in it, and then it goes the other way, wow, that really could be where some opportunities are.
Yep.
Let's go through some things.
When they said a bear trap, Tom, there's only one winner, and that's not the bear.
That's true. Let's have a look here at gold. Very bullish. Look, this one was a classic. You've been watching the show for a long time. I'm sure a lot of you, anyone in the chat, would know that I've probably been a pretty nutty gold bug for a while now. And if you have a look here, you can see this beautiful symmetrical. That's actually almost completed, or very close to completed, the expectation, which is, of course, the distance here. Now, there could be a pennant attached to that, which makes it go much further. But this was a really aggressive move. Break above. You can really see the momentum that came in at 34.50 as well. And it's just been up as everyone gets scared about the dollar and tries to short that and tries to do this and that and all these other things. So it's been a pretty good trade. I don't think it's easy to get in on anymore, Ty. What I would say is I'm going to load an indicator here. We'll load RSI for a moment. Oh, that's not an indicator. What was that? Other thing? No, not gonna load for me on that page. One sec. We'll see if we get it over here. Otherwise, I'll have to refresh it. There we go. So if we load up here, relative strength index, go to a monthly. Now you're going to see that's pretty overbought, yeah? Now, that is not unusual. If you go back through the past, it's done it many times. But what I can say is when you're getting up into these almost 90 levels, which doesn't mean it's going to turn today, there usually is a period of high volatility around it. So when you get into the 90, it could be still $100 an ounce, $200 an ounce. It could be anything. But there will be generally a larger opportunity because of the extreme overboughtness of this. And if you go back through, chuck the monthly on, look at gold on the TVC exchange, I guess, and you'll see so many taps on it. It's pretty interesting when you break it down. So for anyone that's a gold bug, you can definitely check that one out. Ty, you probably agree with gold, but what do you think about silver? It's done what we wanted it to do. It's got to the first level. Got more? What do you think?
Oh, I think silver's almost outperformed. I know it could have more in it, but I would be very nervous at these levels. Now, I think surely all of the take profit that all of our followers and people have taken their profit. I'd like to think there could be more in it. There's no question about that. But when they do eventually reverse, and everything does eventually reverse, silver is going to probably reverse harder than gold. So you just have to be mindful of that. Does it have more? Yeah, I mean, look, potentially it could get up to 44. I've had a lot of trouble, really, couldn't it? I mean, it's one of those ones that makes me nervous. I'm not going to lie. I think I'd be more nervous trading silver than big gold right now. Yeah, it's done. I think it's done what it's needed to do from a technical standpoint.
Yeah.
Now
Well, 42.43 is the area that we hit back in 2000. That's a long time ago. You can see over here. That's a high from 11. Now there is the magical 50, which is obviously only been hit realistically twice or around that level, which is the 1980s. Imagine buying it at that point, and then of course recently. I always say, like, the thing with silver is that it's still relatively cheap in comparison to the gold ratio, but it's been playing catch up. We've kind of thought about this. The problem with silver on the charts is going to be that it's already been going for a few weeks now. If we do get a pullback, you're looking at these 42s and probably more within the 41s. So again, maybe a post FOMC event. For new trades, I think it's difficult to want to buy it at these highs.
Yeah, I just think it's difficult. I think it's a difficult buy right now. Even it doesn't mean it's going to stop, but I think it is. I think there are better opportunities. And you should have already look. If you're a silver trader and you wanted to trade it, I think you should be well and truly up by now. You should have been. There was some very good opportunities on the way up, but right about now, I won't have any of mine.
Onto the Chinese markets, HSI doing pretty much exactly what we've been talking about for the last many moons. And that is just another testament to a couple of things. And I guess one of them is the daily 50 moving average, which we talked about as being a tap, and we never saw it go to a lower low. So obviously it was continuing to make higher highs the whole way through whenever it was coming off it, which was very important that it did that. So just barely made higher highs. Came kind of dull and then broke out. And really the kind of tell for this was actually the Shanghai Composite. So the Shanghai Composite broke to a multi-year high and really showed that there's a lot of momentum. Then we saw Barber, then we saw all these things. So it's funny how the narrative, again, the news can change. And again, you can see it in the price action. So I think probably the best trade here was probably the buy here after this candle was closed above. Signifying that the market was probably more towards the bullish momentum. That was probably the solid pick in this particular trade. So at the moment, still looks kind of good. We'll see how high it can go. But again, it's not going to be maybe as impacted by the FOMC, but I'm sure everything will turn volatile. Tide, oil. What's your thoughts here? Now, the oil's tough this year. So what do you reckon?
Oil has been a tough trade this year, but look, it is playing the game in terms of sticking within its technical boundaries. It's bounced again after 62.50. It did the job there. For mine, it's got to get above 64.50 before we get interested again. If we get a daily close above 64.50 and probably just as importantly close above that moving average, then maybe 66, 67 could be on the cards again. But this is one of those ones where you definitely want to be keeping your trades relatively short. I think putting up a band between 62, 50 and 72 is the bigger band, but there is a smaller band in between that, and that is where it currently is now, and around that sort of 66.50. So probably playing inside that zone, bouncing between the moving averages on the smaller time frames is the best way to play oil. I wouldn't be looking for any longer term moves apart from that. I'd be keeping it relatively tight in terms of expectation from a take profit and stop loss standpoint. So I don't totally trust it, is probably what I'm trying to say. I don't think that I totally trust that a big move in either direction can be sustained with something that can back it in. At the moment, I think it's still lost. And you need to trade that for what it is. And I think staying within the boundaries of its recent ranges is probably the best way to play it.
Mm-hmm. Yep. So it took a little low, which I think could be a little hunt. The key for me is probably going to be around the 63.80. If it closes above, maybe we stay in the range, as you mentioned, and move up to the higher end. And you've got to remember, in a range, one of the most important areas is actually the mid. And that's why often when you look at volume profiles and other things, you'll find that's actually the most traded area. So it makes sense because range, where's it going to touch the most of? The mid. So again, it makes sense that the buys have taken profit here. If they bounce that though and they move through, they could be going to the upper end. So that would be pretty key. And I think oil could be a trade. It just has to activate something. Tesla, definitely a story of the last 24 hours. I thought it would hit 400, Ty, but then I didn't know this, but on Friday, Elon went and bought $1 billion of his own stock, and it sent it powerhousing up. This was a classic options meets technical analysis game. So what happened was, as soon as we broke through 350, which we've been talking about for a little while in this stock, basically we powered. The next level is noticeably 400. Then the stock got an extra bump thanks to Elon placing a bet, I don't know, placing a big trade on himself, I guess. I don't know what's going on there. And then it went up to all the way to 426. I thought it might hit maybe 430s. But yeah, this one, I feel like, is it worth chasing? Look, if again, abundance mindset, personally, I wouldn't chase it. Ty, would you chase something like this? It's already gone a lot.
No.
That's a big move.
No. And look, the signs were that it was going to go. Like, we've been talking about this being bullish. So, I mean, really, if you're going to be, I think 400 is a good target. I wouldn't be disappointed if I left some on the table after 400. I think it was a really good target for the move that we were expecting. And anything after that, look, I think Elon's just scared of that big spaceship that is apparently approaching us. It's going to be here about mid-October time. I'm not sure if you know about this one, but there is a very big alien craft from another solar system apparently coming closer and closer, and it's apparently going to land in around October. So he's probably just getting rid of all of his money, and just in case we get invaded.
What? Is this some kind of like conspiracy? What is this?
I know. No, apparently, no. There is something that
there's an alien craft. Anyone in the chat?
All of the
first I heard.
At this stage, it's unidentified, and it's not following the normal gravitational pulls of the planets. It's actually coming at a trajectory that is very, very unusual. And unlike normal comets, its tail is not being lit up. Its actual nose is being lit up. So it seems to be being propelled by a force that's not gravitational. So it's from another galaxy, and we're not sure. But I think if anyone knows about it, it will be Elon. And
is it going to be like that? Is it going to be like ET and say friend, or is it going to be a nasty one? Like the alien from the movies. We don't want that.
Oh my goodness. But,
okay.
Very interesting.
All right. Well, there we go. Well, he's pumping the stock for that, I guess. In any case, the thing I think I want to bring up for everyone that's watching here about Tesla is mostly just to say, like, there are a lot of different trades. Everyone disliked this stock only a few weeks ago. Then suddenly it's the hottest thing on the markets. And the reason we brought it up today is because a lot of people, we live stream a bit, and we obviously do stuff on our channel as well. And the key here is that there's just so many people wanting to trade this yesterday, and that's the FOMO effect. And we always find that if an opportunity is dropped, move on to the next one. Find another one. Don't chase, because chasing gets you into poor risk management positions. Then you end up having bad stop losses or no stop losses. and things can get away from you. So in trading, remember abundance, temperament, these types of things we always talk about on the channel. Guys, from all of us here at Pepperstone, we want to say thank you so much for joining us here today. We hope you enjoyed it. The FOMC is going to be a big one. The expectation is, of course, for 25 basis points. The key as well may be in the back end. So just remember that on Wednesday here, this is New York time, at 2:30 p.m. New York time, you've actually got the press conference, which could possibility open up to whether we're going to get more cuts, less cuts, any of those types of things. That's the one to watch as well. And sometimes it could even reverse the initial move. So it's kind of one of those sneaky news announcements, isn't it, Ty, from that aspect?
Yes, absolutely. It's certainly one to pay attention to.
All right. Well, thank you so much from all of us here at Pepperstone. We'll see you, I guess, next week for the macro edge, and then we'll come back in 2 weeks' time, and we'll see you here live. Thank you so much. Good luck. Bye for now.
Thanks, everyone. Bye.